Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 5th. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman from mainstream media, but I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We've got some market moving stuff going on here. Basically, the China thing is still really driving these markets. China's saying that the tariffs really aren't affecting them like as much as it's affecting the United States. Well, we got some economic data today saying that it's not really affecting us at all. Now, they're talking about devaluing their currency to offset some of these tariffs. That is going to probably send a race to debase their currency across the globe. But once China starts doing it, we're seeing the European region in general, I should say. So we could really see the euro start to think about devaluing its currency because they don't want to strengthen their currency when they are starting to see a recessionary type of situation here. So they could be doing the same type of monetary easing, if you will, through devaluing of their currency. All right, on with the overall economic data across the pond. We've got some PMI data, which is Purchasing Managers Index. Anything above 50 is expansion. Anything below 50 is contraction. Now, across the pond, we usually look at the flash estimates. That's the most important economic data point out of the European region in regards to PMI, Purchasing Managers Index. These are some precursors to that, but I want to run over these just because we've been seeing some pretty bad economic data coming through on these PMI numbers. We're finally starting to see some decent ones across the pond. Again, this isn't the one to necessarily look at, but it just gives us a bit of an overall estimate. And across the pond, French, Spanish, Italian, and German sectors, all service PMIs coming in above 50, which is expansion in the economy. And they may have missed or beat slightly, but it's usually only by a couple of tenths of a percent there, so nothing to really speak about. And then we move back over here to the United States, and we got our ISM as well, which are our PMI through the form of ISM, which is the Institute for Supply Management. Again, same thing, over 50 expansion, under 50 contraction, and we got a 53.7. That is lower than the expected 55.5, which is probably what a lot of people are going to be talking about, is that we missed on that number. And that is just somebody talking their position, to be quite honest. We're still above 50, and we haven't had it go below 50 in the last couple of years. One of the lowest readings, albeit in the last couple of years, but it's still above 50. And that's about it. Usually on a Monday, we don't get a whole lot of economic data, but we did get some pretty decent stuff today. Not anything really driving the market. It's more everything going on globally with China, Europe, and the tweet fest from Trump on Twitter. Anyway, all right, let's talk about the overall markets. Crude oil making a nice comeback after being down near the lows of the day, which was kind of right close to that 54 handle we were testing earlier. We're getting a bit of a rebound right now. I don't see the demand for oil coming, starting to slow down a little bit, I think. So the demand for that might start waning a little bit, despite the fact that the last couple of numbers we've been seeing those big draws. Then we've got gold moving higher, Bitcoin's moving higher, also flight to safety with gold for sure. I don't know so much about Bitcoin, but gold definitely a flight to safety as we're watching the overall markets really start to fall apart. Bonds up almost another another point higher earlier today. We were up in the 160 handle, which I wasn't really expecting. I thought we'd see a little bit more resistance out of this 160 handle, but this morning ripped above that. And now we're back below that. So we might actually start seeing those levers and pulleys start to happen, but that is on my Fibonacci extension. So we might have to do something with that if that line isn't really starting to shape up like we were seeing. It was acting very nicely on these extensions up until basically today. I thought that 160 handle would handle the pressure a little bit better than it did. It just kind of folded. All right, we've got the VIX up into the 20s. This is bringing volatility across the board into the other equities, which is good for premium selling strategies. And we're in the thick of this earnings season, so we'll be able to get better pricing throughout the earnings season if we have high volatility heading into it as well. And we can see that happening with the Dow Jones Industrial Average off about 500 points. Now, remember on Friday, even last week, I was talking about this, that maybe, just maybe, we were going to start seeing some kind of, maybe a little bit of a bounce and then start to come back down into our area. I'm sorry, trying to find my little pen thing here. Sometimes I move it around and it shows up in different places, which it did today. So let's pull it over here and we can talk about this with the market, the way it was setting up. You can see with this doji right there, that actually has a tendency to make it look like there's a bottom, but we did not get any type of confirmation, which would have been a bar that kind of looked like that, would have given us that feeling that I thought we were going to come up, test this value area low, so get this move higher and then roll over throughout this week. Now, I said last week it looked like that 26 handle in the Dow Jones was going to get tested. Obviously, it was tested today and broken. So bulls are going to probably try to defend that 26 psychological level. But again, we are right back to the point of controls here, which is where the magnet is. We've talked about this time and time again, where you kind of get your magnet looking like that, and it is going to pull the markets back down to that area, to the point of control here. Again, I was expecting a little bit more of a move like that, but we've gotten that move straight down to that target already today, with the Dow Jones being off by about 500 points. We can even look at NASDAQ. Again, similar situation where it came down and tested that 74.78 area, which is lining up with the point of control. It's probably 74.50 to be quite honest. But again, that was hit this morning. As you can see, we came down and almost kissed that line right there. That would have been like really a confirmation of pounding onto that. We could actually start to see the market start to settle down here. So it might be the perfect time to start selling some premium. If we settled that, we've gotten this expansion in volatility, we start settling down in and around these points of control for all of these equities, which they've done, we could really see that volatility come out of these markets rather quickly. Here we go with the mini S&Ps off by about 63 points. It ripped right through the point of control this morning, and you can see we are near the lows of the day. That being said, there's a bit of an area here that we are going to be able to settle down in and around between 29.50 and 28.30, as you can see lining up with these two Fibonacci areas. So we could easily see the market settle down in and around the those two Fibonacci lines. And then we got the mini S&Ps on the 30-minute breakdown. Each blue section here is a full day session. The grayed out area is the overnight. You can see overnight inventory was very short. No attempt whatsoever to flush those boys out on the open, which is a very bearish sentiment when you don't see the day session try and flush out some of those weaker hands from the overnight session. And that's what we're seeing here with the mini S&Ps near the lows of the day. Outside of that, I haven't done anything. I'm just sitting on my JP Morgan. It's starting to look really good with that big move. Remember, we did it on the short butterfly, short call butterfly. So any kind of outpaced move is what we're looking for. We set this up in that type of environment. Expansion and volatility is going to work out okay for us. It will help us overall, and you can see we've got that expansion and volatility going there since I put on that trade. So when we're building these strategies, one of the few things that we can do is set these up to increase our probabilities of success, and that's what I teach. Yes, anybody can teach you. Go out there and design and build a strategy. They aren't going to teach you how to implement that strategy in the proper environment in and around that underlying. And that's exactly what I do. That's what I do that differentiates me from everybody else out there that's on online for the most part. All right, so that's about it, other than if you don't follow us on Facebook, you aren't going to get quick access to these videos. So check us out on Facebook at Pro Trader Strategies. Also, you can like us or follow me on Twitter at Wolfman's blog or our parent company at Pro Trader Strat. All right? If you can't take that, take it easy.